joined by Mr. Ramesh Nair, the COO, Business and International Director of JLL India. He is joining us from Mumbai. Mr. Nair, thank you so much for speaking with us at NDTV Profit. Now, the sentiment among some of the smaller developers is not very positive. They feel a large part of the transactions were taking place in cash, and now with the cash crunch, do you think that the impact on the real estate sector will be quite huge?
So, over the last 3 to 4 weeks, we have definitely heard that the amount of enquiries and the amount of walk-ins into most real estate projects have definitely come down. That's obviously because everyone is today worried about making sure that they have some cash in hand rather than going and buying, making the biggest decision of homes. So this trend is expected to continue in the short run of at least 1 to 2 months. I think after that there will definitely be a bounce back. Surprisingly, and this is a very important data point to note, over the last 3 quarters, for the first time since 2008, I repeat, for the first time since 2008, what we saw was the number of launches. The number of apartments launched was less than the number of apartments sold. So there were close to 120,000 apartments sold in the top 7 cities in India over the last 3 quarters, but the launches were only 105,000. So that shows that the correction phase has started, and the developers today have reduced their launches. Which means over a period of time, the unsold inventory, which stands today at 4.5 lakh units in most, if you look at the top 7 cities in the country, will eventually start dropping, which means prices will also start going up. From a demonetization point of view, we believe this will definitely increase the cash availability for banks, which means interest rates have to drop. This means a lot more middle class, lower middle class will get into the banking system, which means there would be a lot more people qualifying for home loans, which again will help the real estate sector. This is definitely a positive thing for the real estate sector from a transparency point of view. We believe the two biggest things in Indian real estate was delay in projects and transparency in terms of corruption and black money. With RERA and now demonetization, these will definitely be disruptions for the industry, but disruption to help the industry, which means the good developers will do better. The bad developers may not be in the business. So this is that phase where you will see the entire industry go through a big shift, a big change, but for the better.
But Mr. Nair, I want to talk about your point about the new launches. First time since 2008, you've seen a drop in the new launches versus what is being sold. How much is this a factor of the announcement on demonetization than the current inventory levels? And for how long will the developers hold out? Because the end users are still expecting a further cut in real estate prices. And honestly, an end user is not going to wait for lower cost of capital to go ahead and buy unless he thinks that the price is fair.
My data point is actually for the first 3 quarters, so ending September 30th. So I haven't factored in demonetization, which happened last month, into whatever I just mentioned. So the real estate sector was making a comeback with unsold inventory reducing in almost all cities. See, one thing we need to note is when I say the unsold inventory in Mumbai is 80,000 units, you need to keep in mind that completed unsold inventory is only 4 to 5,000 units. The balance is under construction unsold inventory. So 80,000 units unsold inventory, a market which has demand of 30 to 35,000 units, which if we really look at it, 2.5 years of supply is available, which is not that bad for the market. Unlike a market like NCR, where the unsold inventory is close to 160,000 with a demand of 30,000 units.
Right. Sir, what do you think in terms of a structural move in the real estate pack? Now, right now, people are talking that, of course, their demand would dry, things would change. But do you believe that any of these companies that you were talking to, any of these companies that you're trying to get into, they were not quite aggressive, they were not quite bullish, so the downside is limited?
See, every time a market becomes more transparent, more organized, more professional, any industry, we have seen that foreign capital flows increases, institutional capital flow increases, banking and financial sector cash flow into the sector increases, and we are exactly seeing that. We do a highly well-respected publication once in 2 years called the Global JLL Transparency Index. India's ranking has improved over the last 4 years from 46 to 36. And if you look at foreign direct investment into the country in the last 3 years, it's gone up from 1.5 to 2.5 to 4.5 billion dollars, which again shows that there's a lot more interest. I was attending an investor conference last week. I could see signs of 2007-8 in terms of interest levels of investing into India. There were half a dozen new sovereign funds from different parts of the world looking to actively invest in India. Right now, all of them are investing in the commercial space. We did an analysis of where FDI PE money has gone into in the last 3 years, and 85 to 90% of that money has gone into commercial, and just around 10 to 15% is moved into residential. So that will definitely change if the market starts reviving, and this is a disruption, both RERA and demonetization, but it's only going to help the sector. It will help get in more institutional players and more money into the sector.
Right. In terms of India as a market, there is a genuine usage demand as well, which will not die irrespective of what's happening.
Definitely. Today, the statistic of 19 million units of urban housing shortage still continues. So, if the Prime Minister has to deliver housing for all by 2022, which is just 6 years away from now, we need to be delivering 2.5 to 3 billion units a year. And for that, we will definitely need institutional capital from all around the world. See, if you look at global capital flows today, it's close to a $630 billion number this year. And India manages to get maybe 5 billion out of that out of the total quantum. So there's huge amount of opportunity for India, and with Modi creating the right kind of positive waves across the world, it's only a matter of time before a lot more of this capital starts chasing India.
Right. In terms of real estate, or how investors were looking at real estate till now, was only about price increase. But for some of these companies which have a lot of inventory, which have a lot of land which they have bought, even if there is a 10-20% correction in the price, actually volumes spurt in the near term would be good, because their balance sheets are not as leveraged as they were in 2008. So even if there is a price correction and they are forced to sell, this time around they would make, at EBITDA level, they would make good money.
See, the viewers and the analysts, real estate analysts, need to understand one small figure, that the top 8 cities in India, you need only 3,000 acres a year total. This is including residential, including office, and including retail. So if you look at the residential demand in these top 8 cities, it's roughly 250 million square feet, which translates to 2,500 acres. Office demand is around 35 million square feet, which translates to 350 acres. And retail demand is around 15 million square feet, which translates to 150 acres. Now you total these three up, 2,500, 350 and 150. So the country needs in these 8 acres, in these 8 cities, just 3,000 acres. So one needs to keep that in mind. So just because you have land doesn't mean you can keep selling forever. You can only get a certain part of the overall demand.
Right. No, what I meant to ask is that if prices go down, there would be a demand shift, right? The people would want to invest. And that's when these companies would benefit, because till now the only assumption was that if you have land, the prices go up, you tend to make money.
See, the last 2 years, if you look at it, Mumbai market has gone up only 5% totally over the last 2 years. Plus, you take into account inflation. So the markets have already corrected. Today, a lot of developers are willing to offer freebies. One needs to keep that in mind while sitting with the developer for negotiating. And today, if he sees that there's a customer with a checkbook sitting in front of him, he's further willing to cut rates. And that's why I believe this sentiment, what we've been seeing over the last month or so, is probably the best time to beat down the developer and get a good deal. Real estate developers also follow sentiment, so things start improving maybe 3-4 months later. Maybe you won't start getting these kind of deals in the market.
Right. What essentially should be, say if somebody wants to buy a house now and he has decent amount of money, what do you think should be the strategy? Should they look at good offers or just go and grab, what they are getting at a decent price?
Strategy is quite simple. I think he should do his homework. He should drive around, look at all the potential projects in the location. He should do a detailed check on developer credentials, his financial standing, his legal risks, his construction risks. Look for projects which are around halfway through at least, unless it's from the best of names. Then try and meet the promoter himself and make an offer which is lower than the quoted price, and he could get a deal in today's market. I think that's the strategy. But make sure you take your checkbook when you're sitting in front of the developer. Show him that if he is willing to sell at the price which you are saying, you're going to write the check at that moment for him. I think that should be the negotiation strategy in today's market.
Right. Mr. Nair, can you give us some details about what is the cash position with large developers, say in the Mumbai market as well? If we see a near-term slowdown in sales, and given that we have the RERA which has come through, will they find themselves in a tight cash spot? Will they need to take on further leverage?
One thing is a lot of developers have been taking leverage from NBFCs, and again the refinancing, one person financing first, then the next person coming and refinancing, the third person coming and refinancing again. Debt is not, NBFC debt is not cheap, so that continues today, but the lack of sales in the last 1 month pre-demonetization and what we expect the next 1 or 2 months, general slowdown driven by sentiments, is definitely going to impact cash positions of most developers, especially if he is leveraged, because irrespective of clients walking in, irrespective of Saturday, Sundays, his interest is he's being charged an interest. So obviously that is going to pile up.